So I am very happy to have here with me today Stephen Dean. Stephen Dean is the chairman and the CEO of Artemis Gold. Artemis is a $2.4 billion market cap company. It is building the Blackwater gold mine, which is in central British Columbia. Blackwater, once built, will produce over 500,000 ounces of gold per year at all-in sustaining cost well below $1,000 an ounce. So it will be, once built, one of the best gold mines in the world. It's an important position for the Gabelli Gold Fund, and we are looking forward to it coming into commercial production next year and then ramping up into production. So let's get started and figure out and learn how you build a gold mine. So the first question for Stephen is, if you can just tell us a little bit about where you were born, where you went to college, what your major was, and then how you got started in your career.
Sure. Thanks, Chris. And thanks for inviting me to have a chat with you. You've been a longtime supporter of not just Artemis, but its predecessor company, Atlantic Gold. And we really appreciate your support over the years. I'm originally from Australia, as you can probably tell by what's left of my accent. I've lived here in Vancouver, Canada for about 25 years now. But I started in the mining industry in Australia, in Perth, originally. Although I actually started my involvement in the sector as an investment banker to the mining space, and then was invited over to join a startup company at that time called Normandy Resources, it was then known. And it was about a $10 or $20 million company at that time. And by the time I left that company, it was Australia's largest gold producer, and it ultimately was sold to Newmont in a three-way merger between Franco-Nevada, Normandy, and Newmont in the early 2000s. So it was a bit of a rocket ship, a great learning ground for this business, and it put me in a great place to start my own business, and which is what I did in starting Pacific Mining Corporation. We acquired an existing mine, then built a new mine called Carosue Dam in Western Australia, which is still owned by a company called Northern Star today, and still going strong 25, 30 years later. Very proud about that. And that company was ultimately sold by way of it becoming a subsidiary of a major company here in Canada called Teck Corporation, as it was then known, today known as Teck Resources. And I joined Teck as president in the late 90s, and played a role in putting its then subsidiary, a company called Cominco, a household name in the mining business here in North America, together to form Teck Cominco, and then ultimately it changed its name to Teck Resources. That's what brought me to Canada.
Oh, that's great. Okay, so then can you talk about, so you were the president of Teck, and then eventually your next kind of foray into the mining industry was with Atlantic, and you also had a little bit of a hiatus there. I remember us talking about it at one point. Can you talk a sec about that, just from like a career perspective? Anybody, young person, like myself, or sorry, not me, young person like my son.
That boat sailed.
who might be listening to this, about just what you were thinking about from a career perspective with that, and then how you decided to get back involved relative to Atlantic.
Yeah, sure. Having achieved, in my mind, success in helping Teck and Cominco become the one company, and as you said, Teck Cominco, I felt it was time. My kids were young teenagers at the time, and my eldest was, on a short-term path to going to college, and I realized that I'd spent the vast majority of their childhood on the road. At Tech, I was probably on the road, whether it be to one of the facilities, the smelter or mines here in British Columbia, or elsewhere in North America or Latin America, and then Australia, 250 days a year on the road. So I felt I needed to reconnect with my kids, and I took a sabbatical at the end of 2002 for the best part of 10 years. I call it a sabbatical because I did focus much more than I was able to when I had the big job at Tech. But it was not exactly a period when I didn't have any involvement with the mining industry. I helped a buddy of mine put together some assets that formed what is today Oceana Gold. I was the founding chairman of Oceana Gold. We listed that separately, initially in Australia, and then ultimately it came here to North America to list. I formed a little copper company with an ex-colleague of mine from Tech called Amerigo Resources, and I was chairman of that. And it remains a very successful copper producer by reprocessing tailings of the very large El Teniente mine owned by Codelco, one of the largest copper producers in the world. And I went on the board of a couple of investment funds out of your part of the world, New York City, for a while, and that gave me some involvement and some perspective on what it's like to sit on your side of the desk for a number of years, and that was a great time. And then at around 2014-15, you might remember this. It was a pretty dark period for the mining sector, gold sector in particular. And yeah, I've always sort of thought that provided you have access to capital, if you can find the dips in the cycle, and if you have that access to capital and you could start a new business, particularly develop a new mine, then that is the right time to do it. And that's what we did with Atlantic at the time. It had a series of deposits and a mine called the Touquoy mine over in Nova Scotia, Eastern Canada. And we built that in record time and got that into production. And we managed to see that increase in shareholder value by in excess of 1,000% over a period of about 4 or 5 years.
Right. No, that's great. Okay, so you saw this asset and you decided to acquire it, and that's what happened with Atlantic. You sold it at a big premium to Australian St. Barbara, and we were shareholders of that at the time. And so thank you for that. We're looking forward to thanking you again for what you're going to do for Blackwater. Could you then kind of discuss, so after you sold Atlantic, you were looking to replicate your success or even improve on your success relative to Blackwater. Can you talk about what you saw at Blackwater from an asset perspective and any similarities or differences between what you saw with Touquoy and how the success in Atlantic might have played into your acquisition of Blackwater at Artemis?
Yeah, so Artemis was actually a spinco as a result of the sale of Atlantic, and we had an asset in Bulgaria. We actually still do within Artemis. That we saw some geological similarities between what we had at Moose River and Touquoy and this asset in Bulgaria. We saw it as having some significant potential upside geologically. I think we still do, although that's not become apparent in the time frame that we hoped. But so Artemis was a spinco, and we and some early founders of Artemis, and the very same early founders and capital backers in Atlantic put a small amount of cash into Artemis with a view to looking around for another development asset to essentially use the same team to to do something similar using a similar business model. And that business model includes in some cases, some unique characteristics of our risk management approach to the business. Combine that with the fact that board and management rather uniquely had about the 40% ownership level of both Atlantic as well as Artemis. And we've been fortunate to maintain that. And, we've done that by putting our capital right alongside people like yourselves' capital every time we needed to raise capital. And what that means generally is that we're pretty frugal with issuing our shares, because to us it's more valuable than money. And that's what's kept our capital structures tight. And that's what's kept our return on capital for our shareholders in good stead. So that's key tenet of our model. The other tenets are things like fixed price contracts on plant construction, things like grade control, knowing 10 to 20 times more about our ore body when we go to mine it, to de-risk those critical first early days of startup of a new project. And just having a team of people who not just built mines once before, but several times before, as I have, and bringing that experience to bear to successfully build in a very risk measured way these new mines.
Right. Could you talk for a sec about that team aspect of it? Because again, I was just telling a colleague here about, I'm about to do an interview with you, and the concept of just, having an idea to go and build a mine. And, how do you actually end up doing it? Because you're not a big company. There isn't that established infrastructure in place. You're not Agnico Eagle or Alamos Gold or something like that. You actually have to go out and build a team. So can you talk about how you, as the founder of these companies, Atlantic and now Artemis, how you go out and find the team, how you find the right people, and how you kind of build a culture amongst the team to kind of get it going? And then another question, if you can remember, is just in terms of being the CEO, what's the most important role of being like the CEO of a startup, gold mining company that's building a mine?
So it's not so much, for me at least, a matter of starting a new team every time we start a new mine or start a new company. It's the bringing together of the same, in many cases, people who've successfully built the mines that we've done in the past together again to the same, to a new project.
Right.
And we've supplemented and or changed some of those key members over time. But the guy who calculates my resource modeling, I've used for 30 years. Right. And he's a genius. He's a rocket scientist. He knows the sorts of risk profiles we like. He knows our statistical risk averse approach to mining. And in fact, sadly, I think he's going to retire in the next year or two. But we've got a new, younger, what I call rocket scientist, who's been studying under Neil for 10 years. He was with me at Atlantic and as now at Artemis. He runs all of our resource geology. He will be the next generation of that important side of resource management. And there are others, the financial guys that work with me have all moved through both companies or other companies in the past, and almost all of them have large company background. You mentioned Agnico. Okay. We pride ourselves on having a senior level management team in a junior box, and I think that's an important part of our business model as well.
Okay, got it. Thanks.
And then the second part of your question, was how do I? What's one of the things?
Yeah, I guess like I've heard it described to me before as like the CEO of a mining company, especially like a startup, you know, or startup or a gold development stage company, maybe best described as like an orchestra conductor. You know, there are lots of different instruments all playing really well, and you have to figure out, you know, which to play when and which to or, you know, maybe which to start playing more. You know, you have to play more staccato, you have to play more, you know, lente, if that's the right term, piano, you know, like, or what have you. But I mean, that's how it's been described. I mean, what would you say you're, you know, someone else once described to me, I said, what do you do every day as a CEO? And he said, what I do is say no, you know? So, I mean, how would you kind of describe what's the most important role? Like what's the most important job, sorry, of a, of a CEO in your position?
I'm sure everyone has a different answer to this, but my answer is, you know, you talked about what it's like to be a conductor in an orchestra. I think it's more like a general in the lines of a battle, and you know, being very strategic and very sort of big picture to coordinate whatever challenge we have on that day. But I think so an ability to visualize and have a vision for a business and keep that vision and keep it constant and consistent, and to be able to translate that not just to people like you, but also to the people who work with us here at the company, but also having a unique ability. And this is where I think it differentiates people who may aspire to become a CEO, and an ability to also have an attention to detail.
Right. Okay.
It's an ability to have both a vision and up here at 30,000 feet, and to drive that vision relentlessly. And relentlessly is the right word, because you know, there's some long days and light nights when you're trying to build a company, as we all know, but also the ability to dive into detail if necessary, where necessary, and to arc those various initiatives up and down. I give you an example. During the early period of Artemis and its building of this company, I spent 30 to 40% plus of my time on ESG matters, mainly social and mainly environmental, around because we were in full-on permitting mode. Right. So partnering with our First Nations partners was a very important piece. Establishing those partnerships, establishing that trust, and getting their support for all the myriad of environmental approvals that mines need to get all over the world, not just in Canada or the US. That's where I knew I had to spend most of my time, and I did. And so that now it's more balancing towards, you know, the construction risk management side, coordinating all of the components of the mine, the transmission line, the plant, the TSF facility, making them all come together so that they then will be able to join together in the starting of the mine. And getting 3 out of the 4 is great, but you can't start the mine unless you get all 4. So that's where my focus is right at this minute. So it's an ability to change and morph and refocus emphasis and your skills and risk management approach to the business, dependent upon what stage it's in.
Right. Okay. Yeah. Okay. That's awesome. That makes a lot of sense. I see. Yeah. I could see you that I probably should imagine that the general would have been the right metaphor to use for you. I bet, you know, Megan, investor relations, if I were to ask her, how would you describe Stephen? Maybe to me, she'd probably say general, maybe to the other employees, something, no, but, but anyway, so great. So, right. Okay. So you mentioned ESG. Can you talk also like a little just about so you said environment, First Nations, but what about like within the community, also the broader community, that general area there, which has a lot of forestry, and there are towns, people who live nearby. How do you get a buy-in from them? Because they are going to be a large portion, or they are and will be a large portion of your employee base as well. How do you work with the broad communities nearby to get them on board with this mine?
Well, there's several components of that. You know, I think starting right from the get-go, just being a good corporate citizen in those communities, and doing what you say, and being responsible, complying with the conditions and your business license conditions for being able to be there and to operate and to build and this facility is number one. Number two, being very conversant and engaged with indigenous peoples whose interests are connected to the mine and its infrastructure, and making sure that they benefit not just financially, but in jobs and in training and just general wellness. In fact,
Right.
in the community, and mining companies are uniquely positioned to be able to do that, even better than governments, because we're on the ground. We can provide employment and jobs and long-term careers and purpose and meaning to indigenous peoples, and while they still remain on their indigenous and homeland.
Right.
Very few companies can do that. Very few industries, I should say, can do that. So I treat it as a privilege that we can do that and work as well as we are trying to with our indigenous peoples. And then there's a broader community, of course, as well, and the general jobs and economic drivers that we provide, whether it be for the local stores, because we buy goods from them, or services from the local environmental scientists who work in the town. Now, you're right that we have several 5 to 10 townships that really encircle from north to northeast to east of us, and those towns were originally there because of that area being the heartland of Canada and British Columbia's forestry business. And sadly, that business has declined for various reasons, or much of it has moved to the southeast in the US, the Canadian forestry industry and the big players in the industry. And that has left a wonderfully trained workforce, logging truck drivers, pulp mill operators, electricians, maintenance people, and so what we've been able to do as we've ramped up construction and now approaching operations for Blackwater is take that workforce who've been laid off over the last 2 or 3 or 5 years by closures of the mills and the pulp mills, bring them into our industry, retrain them when necessary, and provide a long-term future. Those people who live in those towns are there because they love living that lifestyle, and they don't want to move to Vancouver or to some other big city. They want to live in the interior, in a region where they go hunting and fishing and winter activities, and they've got a boat and a truck in the drive, and that's a lifestyle.
Yeah, exactly. Okay, cool. That makes sense. Can you talk for a sec about what you really like about the Blackwater, about the ore body itself, and about also anything in terms of the infrastructure, in terms of how, I remember I was talking to one of your financiers, and he was saying one thing he liked about it was the use of gravity, like in terms of being able to bring the ore from the pit down to the mill, and there's some things about in terms of the geometry of the ore body too that make it special. Can you talk for a sec about that?
Yeah, sure. Firstly, what I really like about this Blackwater deposit is firstly the scale. Like there were very few, if any, deposits of the order of Blackwater, 12 million ounces, undeveloped in North America. Like they're very rare. And scale is always important. Secondly, this deposit is very large and relatively homogeneous and very continuous.
Right.
So it's not broken up into, it's not a geological term, but it's a big blob of gold, basically.
Right.
And so it lends itself to a fairly reliable and consistent and low risk extraction, particularly at the economics that we're applying to this deposit. The leverage of a large deposit to periods like we're experiencing right now with a rising gold price is enormous. I don't know what the value of the in situ value of the gold is at today's spot price, but it's a very big number in the billions.
Yeah. Yeah.
And so that also makes it rare. Then there's some more granular things that like the one you just touched on just now, and that is, the deposit is on the side of a hill. So when the trucks mine the ore in the pit and they are loaded, it's a downhill loaded hole. In other words, the energy, in fact, we can capture energy in that whole downhill when it's heavy and loaded to either the mill or to, if it's waste rock, it goes to the TSF or a waste stockpile, all down a valley, down in the valley. So the economics and the costs, mining costs, for example, of ore and waste are much lower than if you're going uphill or even flat. Another factor is its proximity to the BC Hydro renewable energy grid. So not only is it a green source of energy, but it's very inexpensive, of the order of 6 or 7 cents Canadian.
Right.
For your US listeners, 5 cents US a kilowatt hour, which puts it probably as the cheapest source of energy in the world.
Yeah.
And energy and water are the two things that all mines need, and we've got an abundance of both, and an abundance of low cost energy in particular.
Okay, right, and that's fantastic, right? Okay, so you have the ore body, it's in a great location, you have the team, you have the community buy-in. Now the big thing is, how do you get the money? How do you get the money to build the thing? So hundreds of millions of dollars, and that's a key to success. And you've been very successful in terms of raising the capital from traditional Canadian banks, a stream, and also equity holders too, including us. So can you talk about how you think about that and how you kind of pull off that monumental task of raising the capital necessary to build it?
Well, it's like all businesses, whether it's a mining business or otherwise, if you have a track record of returning capital to those capital providers, whether it be bank lenders or whether that be equity providers, that's always a good start. And fortunately, I have relationships with various capital provider partners that have been developed. In some cases, for example, the very large BlackRock firm out of London, London office, have invested alongside me in several of my companies and startups and developments over 30 plus years. The guy who runs the London and mining fund, as well as other sectors now, because he started off in the mining, is now across a number of sectors, has been a supporter of mine and I've hopefully returned good returns to him and his funds several times over the years. So it's a combination of that trust, also for lenders, relationships with lenders. The lenders that were lenders to Atlantic are also the bank lenders on the project loan facility for the Blackwater deposit. And then we have other partners like Wheaton. The CEO of Wheaton, Randy Smallwood, is a good friend of mine here in Vancouver. Very experienced industry guy. He's been around as long as I have in this business, and there's a good degree of trust and relationship there. And how we select and layer those capital components in is really a function of minimizing the cost of that capital.
Right.
The streaming cost of capital for that we produce as a byproduct silver, for example, as you know.
Yeah.
So we I think we raised $180 million of our $700 or $800 million capital requirement from Wheaton on a small silver stream, on a stream of metal that most people didn't even know we produced. Most people thought we just produced gold, but we do also produce a significant quantity of silver as a byproduct. And so the cost of capital, circa 2%.
Right.
The project loan facility, slightly more expensive, but able to be repaid in short notice without penalty. And then the most expensive component of capital, but nevertheless necessary, because those two other providers require us to have that, is equity. And we've staged carefully the issuance of equity to minimize the dilution to all of our shareholders. We've always written the first check as owners and management, our first for 40. If we want to raise $100 million, we were always in for 40 first, and then we go around to people like yourselves through our banking investment banker friends and fill in the rest of the book. And that always helps being able to do that as well.
Yeah, no, I've noticed that having that big insider ownership stake helps us also be comfortable in investing too. So that's a big deal. Okay, so quick, second to last question. How do you deal with adversity? You did have forest fires. I visited your office last summer. The forest fires were actually raging in Vancouver, which is pretty close to the mine. Not in Vancouver, but outside of Vancouver. So could you just talk about that? And that affected you had to evacuate the site. Can you talk about how you deal with adversity just broadly? I guess you did. This was an issue.
Yeah, we manage our business, and we manage the build with a risk register, and we weight the various potential risks to construction or development of the mine. Wildfires was definitely on the list, but it was sort of down towards the bottom last year. And as you will remember, in 2023, we had Canada and British Columbia in particular had the worst wildfires on record history. And sadly, there was a large fire in the vicinity of the mine that ended up burning straight through the mine. Fortunately, the risk management tools that we had deployed resulted in us having some very minor damage only, with the various precautions we took. Most importantly, we evacuated our workforce. We had at that time 300 or 400 people, and then lo and behold, here again in the summer of 2024, we had another one, which is remarkable in terms of the odds of that happening, given that there was so much burnt out already. But we did, and we had to have an evacuation again. So how do we manage that? With all the risk management tools of managing, say, a fire risk, evacuation protocols, making sure we have provision within our budget for a contingency, looking to save and clip the budget on other components of the build, so we can save here and afford the delay costs that we've incurred on those wildfires, for example. We ended up being after these two wildfire incidences and a couple of other things that we've had to manage within 7% of our original guidance. We had to revise by 7%. We would have rather not to have done that, but we think that's an outstanding outcome for something that we had no control over.
Yeah, I agree. So that's great. So great. So that, yeah, I agree. I mean, you've done a great job of managing through it, not having to raise more equity, these really unforeseen kind of force majeure. So it's been fantastic. So now the mine is about to declare commercial or first gold pour, commercial production next year, get up and running, ramping. And again, we expect it to be one of the best gold mines in the year, generating lots of free cash flow. I'm sure you've had inbound calls about potentially selling this mine. How do you figure out whether or not to harvest free cash flow, like another holding of ours, like Lundin Gold, or potentially sell the mine, like we've had other companies do. So or like Atlantic did. So what's the thought process there?
Yeah, it's I think it depends on a whole bunch of factors. I think Lundin Gold is a great example of a huge success story, and we have the greatest admiration for the track record of that management team and that company. Um, and you know, my answer to this question, because you're right, I do get the question a lot, is, you know, in some cases, if you look at my history of companies that I've been involved with founding, it kind of depends on the overall market, and it's all comes down to one thing, and that is, what is the optimal return on capital that I can get for our shareholders, of which
Okay.
we are one. And if I can, if the capital market does not reward, as it has done in recent times over the last 10 or 15 years, does not properly reward junior companies with good assets, then an M&A transaction is a way to do better than the market is prepared to pay.
Right.
If the capital markets reward and recognize the asset and management record of a company, and the stock price performs in line with value or even a premium to value, then that is me doing my job as well. So it is purely about how do we maximize our returns to our shareholders, and sometimes that can be in an M&A transaction. Sometimes that can be just achieved and realized in the market. If you can sell your Artemis shares at $30,
Yeah.
that's going to be a good return for you in the market.
Yeah. Right.
You're agnostic as to whether it's some big senior company giving you a check or whether it's some trader in the market buying your shares at $30. So that's how we think.
Yeah, awesome. Okay, great. Thanks, Stephen. So we're very much looking forward to that shareholder maximization in the relatively short term. And best of luck again in bringing this thing to production. We're really looking forward to it. The stock's done very well for us over time, as you have met those guidelines and those guideposts. So we're really looking forward to this next phase. So thanks very much for doing this, and see you soon,
Chris.
hopefully. Okay, thanks, Stephen.